What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it, my friends. It is the 20th day of October. Here we are sitting at about $110.9 thousand right now. 10 hours, 52 minutes left in this day. We're up a little bit. We've come up today, Monday. We were up yesterday, Sunday, and on Saturday as well. We had a positive weekend, which does mean that if we look at the Bitcoin futures, the CME futures here, we do have a gap, right? We do have a little gap down here. The gap has not filled. There is a gap right here, but I must admit, this looks like a perfect bottoming candle right here. Everything about this execution on these three candles right here makes me think that we are turning around, that we are moving higher. That doesn't mean we can't go back down to fill this gap. That doesn't mean that we can't go a little bit lower or find a higher low, but we are definitely, I think, at our low point and ready to move higher overall. I think we have found our low. I think it's very obvious at this point that we found our low, but in that realization and in that, what that brings to the market, the life that'll bring to the market, we need to stay focused and also pay attention to where we are in the price right now, right? We just found resistance here at prior areas of support, at prior areas of resistance here, and support there, right? Resistance there. We're finding resistance now at a relatively key area here at about 112, 111K. It's very possible that on our path higher, which I do think we are on a path higher, we do pull back and we find a higher low. It is still possible that this is not the low and that we do go below it. And if we do, I don't expect anything dramatic, but something, around $102 to $101,000 could be a possibility still. I want to look at some of the short-term stuff, and then we'll zoom back out and project where we're going here over the coming days and week. Hint, hint, spoiler alert for those of you who are trying to make this quick. You just want to get in and get out. I very much believe that between now and the 29th of October, we are going to basically continue to grow. Now, will we be at new all-time highs? I doubt it. Will we be somewhere above this high? I would think so. So something in this area here is likely where we're going to end up between now and October 29th. That's my going expectation at the moment. But let's fine-tune this a little bit. Let's look at the 1 hour time frame. Sorry about that, you guys. 1 hour time frame. I wake up in the mornings and I get a little coffee, let's just say. Coffee in the mornings. 110.8K right now, 1 hour time frame. We do have lower highs here. High, lower high, high, higher high. That is bearish divergence. It would make sense then to come back and fill that divergence down at about 109.4K, 5K, right? A lot of people are bullish right now. A lot of people are bullish on X.com. The bulls are the loudest here. They were also the loudest back here. And the bears were the loudest here. And they were also the loudest here. There's something to remember with that, I guess. There's something to say about that, which is that sentiment of people right now is irrational. People are emotional. The bears are desperate to see anything that validates their opinion. The bulls are desperate to see anything that validates theirs. And sure, breaking out of this downtrend, moving up like this, it's definitely validating, but we still have lower highs. We have a lot of work to do before the bulls are truly validated, but I do believe we have found the low. At this point, I do believe we found the low. I was expecting this range to break out to the downside. Maybe we'd have a fake out and then move lower, but nope, none of that happened, man. All we did was we broke out, we back tested for support, which is bullish, and then we had a massive reaction off of that. So I say massive, but relative to the 1 hour, it was massive. I think the tide is turning. Volume's coming back in. All good things, right? All good things. We do have the CME gap, again, to pay attention to, so that is something to consider. But not all gaps fill, right? We've got plenty of gaps like this one here at 103K that never filled. We've got gaps down here at 92K that never filled. We've got gaps all the way back here, same kind of gap that we have now, that never filled at 60K right there, or at 53K, right? There's gaps galore all the way through this. We got a gap down here at 39K. There's plenty of gaps, and typically, if you notice, and I actually made a whole video on this, I'm not going to go into depth with this now, but if you notice, gaps typically happen when Bitcoin is on the move, right? Look, we get a gap. We got a gap there. We got a gap there. There's a gap right here. There's a gap right there. There's a gap right there. There's probably some, maybe not gaps right there, I guess. But there's gaps all along the way up whenever we were expanding, right? In these expansive phases, that's whenever we get our gaps typically. And I think that being at the base of this range here, we might be in an expansive phase now. We might be moving higher. Might make sense that we leave some gaps behind. That's all I'm trying to say. Bitcoin 1 hour time frame, looking at the RSI, bearish divergence, stochastics bearish divergence. The MACD does not have bearish divergence, but you basically have a double top in your histogram. It might make sense to come down a little bit. Come back down to about 109.5K or lower. If we take this low here, put it at the high, I mean, yeah, you probably do return, if I had to guess, something around $108,000, maybe even as low as 107.5K. And I would expect that while the bulls are really loud now, the bears will be very loud down here, and the bulls will be very quiet, and then we'll move back up. The bulls will be very loud, and then that's whenever it's time to come back down again. You know, that's just how it's going to be. I think that 108.5 to 107.5K are is the target zone to pay attention to. Something around this last low. Probably a higher low, probably, but something that I would think is just below this 382 here. It is possible that we could go lower. We could go to the golden ratio at 106.6K, 106K itself. It's possible that we could do that. And if we do, it's fine. The line in the sand that we don't want to break, at least at the moment from what I can tell, is probably about 104.5K. We don't want to break that line. If we break 104.5K, this is likely not the low. We likely will go lower, right? And I would say that the statistics even go up if we break 106K. If we break below that, there is a better chance that we do take this low out. So we want to hold 106K. We need to hold 104.5K, and I expect that we're not even going to go below 107.5K. We're probably going to hold 107.5 to 108.5. That's the area, the target area that we're considering right now, okay, for a little bit of a retracement here. 4 hour time frame. And if I'm wrong, we'll just continue to build. That'd be great. But typically, you know, at this time of day, we actually do turn things around. I've noticed that we'll come up to this time of day and then we'll reverse. Whatever it is, we'll come down to this time of day and then we'll reverse, right? Like, let's see. I don't know. That's the 12th hour here. Yeah, like look at this. Literally same exact thing. You move down here, and then on the hour that you moved up, this 4 hour candle here, that was the 12th hour. You can see down there. We're moving up right now, and what hour is it that we're moving down? We're moving down on the 12th hour. We moved down on the last one too, on the 8th hour, but anyways, I digress. I'm just saying I've noticed it. It's not something to go off of. Don't base trades off of this. Don't base your logic off of this. It's more of just an observation, and observations come and go. It's like a fad. It's a phase. I've noticed over the past couple months that Bitcoin typically at this time of day, I feel like it does most of the time, turn around from whatever it was doing in the beginning of the day. At this point of the day, it turns around and it'll do the opposite. Not always, but more often than not. Anyways, if that doesn't make sense to you, don't worry about it. Don't get lost in the translation. 4 hour time frame, RSI rejecting the overbought zone. 2 hours 44 minutes left in this 4 hour time frame. That looks like a top candle there, a relative, maybe I should say a high candle, not a top candle, but just a relative high candle, rejecting the overbought zone. Bearish divergence on the stochastics. You're at a rejection point here on the MACD. Even though you look nice and you're coming up, I think you're at a rejection point, so come down a little bit. Today, Monday, might give some of that price action back. Again, we might close the gap on this gap a little bit. I don't know if we go down to 106.6K on the CME futures, but again, we might come down a little bit. We'll see. That's definitely a compelling argument to move down, you know, for Bitcoin at least down to 106K, which again, that's our golden ratio zone. Hold on, guys. Hold on. Okay, there we go. There we go. Daily time frame, or actually, hold on. On this 4 hour time frame, we take this high here, this relative high, you put it at this low. You can see we're actually at the golden ratio and we're finding resistance here. It might make sense then again that we go down from the golden ratio. Typically you do come back down to about this area, which 108.1, 109.6. The area that we were originally paying attention to is 108.5 to 107.5. I would think we more likely go toward this yellow line or somewhere just above it than anything. But again, similar areas lining up as far as price destinations go. If we take the overall high here, we put it at the low, we just hit the 382 perfectly. It's very common to go from your 382 to your 236 and then back up to the golden ratio, and that 236 is right there at 108.5K. Again, I don't think that we're going to take out this low. I don't think we'll take this low out, but I think that we will find support somewhere near it, right? Something like that. We'll clear out our bearish divergence right here, We'll clear that out, and then we'll find support at the 236. It's absurdly common to go from your 382 like we are now to down to your 236 like we are now, and then going to your golden ratio. It's absurdly common. So I would think today, Monday, might be a little bit of a reprieve for the bulls, right? We're probably going to come back down a little bit, and then on Tuesday, tomorrow, and going into the rest of the week, we should be moving up again, coming back to the idea that between now and the 29th, we're virtually just going to be moving higher. That's my expectation, right? More or less. I'm drawing a straight line, but it won't be a straight line. Today, we might come back down and close the day. I mean, we could close the day red. We might close the day with a big wick all the way up to the upside. I would still believe that we continue to grow because we have the FOMC announcement, the press conference on the 29th, where they're announcing that the Fed is announcing that we're cutting interest rates. So I can't imagine that we're going to do anything but pump going into that announcement. That's typically what we do. In fact, I think I did a video on this last time back on September 18th. We looked at every single FOMC announcement that's been had this year. And by the way, only the last one is the one that they cut interest rates on. Every announcement, even whenever they announced that the rates were staying the same, we moved up into the announcement every single time. Every 100% of the time this year, 2025, for every FOMC meeting we've had, we have moved up in the corresponding week or weeks ahead of that meeting. So that would imply then, again, with 100% success rate this year, we move up. Really, you guys, and it's a shame because we only have one more FOMC meeting after this upcoming one, but you're batting 1,000. If you really want to be a successful trader, wait a week before the FOMC meeting hits, buy the dip, go long on the low, whatever it is, maybe 2 weeks before, whatever it might be, and then base your trades off of that. You'd probably do all right, honestly. Not financial advice, not a financial advisor. And the reason why most people won't do all right with that is because people get greedy. They'll have one good trade with the FOMC meeting, and then they think they can get fancy with other stuff. I bet if you just stuck to FOMC, you would probably do pretty well. But again, not every FOMC meeting is positive. That doesn't mean we're going to grow into every single one of them. I'm just saying this year, 2025, that's been the case. We have grown into every single FOMC meeting. What do I mean? I mean, like, if the price is here and the FOMC meeting date is here, then we grow into it every single time. 100% of the time this year, it hasn't failed. It doesn't look like it's going to fail this time, and I would very much expect that we do continue to move higher. And again, I don't think we'll be at new all-time highs, but we'll probably be above this high. What's a good point in between this high and this high here? The golden ratio zone, 117, 118K, maybe even 121, 123K, something like that between now and the next 9 days, I would expect is our path, okay? But it could, there's probably going to be volatility along the way. Again, we're here at 110.7K now. Wouldn't be surprised if we went down to 108.5K before moving higher, okay? If I'm wrong in assuming that we move down and then we move up first, what we would likely see is some kind of interaction with the 382 where we just hug it like this and then we push higher. If we do something like this, we likely do not go down to the 236, okay? We will likely consolidate here instead and just push higher that way. And that's fine. We could see price action like this too. There's a couple of different ways to interact with the fibs, but just this interaction so far makes me think of this classic dynamic between the 382, the 236, and the golden ratio. Typically, you see this little dip and run right here, but we'll see. Time will tell. Anyways, guys, I don't think I have anything else that I want to say. If you enjoyed the video, hit the like button, subscribe. The bull run's still on. It very much is. I'm not one of those, I'm not going to be like loud in your face about it like a lot of people are on X.com right now. But we've never doubted the bull run, not once, right? We've very much, if anything, we've just been disappointed, but still expecting riches and glory to come to everybody who's patient and waiting. If we look at this pattern again, the pattern that we're in right now is very bullish, first off. Okay, this is a megaphone pattern. Not all megaphones are bullish, okay, not all of them. But typically you do get, from my experience, and I have 10 years of experience doing technical analysis, typically from the start of the pattern you do get 5 touch points. Or 5, I should say 5 moves, maybe not touch points. Typically that last one does not touch. You're actually looking for that to not touch. So 1, 2, 3, 4, 5 moves right there, right? And this is what they call a partial decline, where you reach for the base of this trend line, you reach for it, and partial declines typically happen in broadening patterns, okay? And of which this is a broadening pattern, but it's a megaphone because you have one trend line going up, you have one trend line going down like a megaphone, right? It's a little bit, it's a rare kind of pattern. It's a very volatile kind of pattern. And we've experienced a lot of volatility since July. Whenever you get this, whenever you miss the trend line, that's because you're either A, not bearish enough to go down there, or in other words, B, you're too bullish. There's too much buying pressure. Whether it's there's not enough selling pressure or there's too much buying pressure for the price to go down, it's a bullish thing that you can't reach this line. It's saying, hey, this pattern's coming to an end, and we're on our fifth move anyways. So likely the next time that you come up here, you're going to break through this pattern. A lot of people might assume, and I'm wondering, if over the coming weeks, whenever we do make our way back up here, if people will be paying attention to this trend line and saying that we're going to find resistance off of it and reject back down. This next time we hit it, maybe we consolidate for a second, but I would very much think that we slice through it like butter, more or less, and we push higher, immediately going to 140K. This next attempt is going to break us free. That's all I'm trying to say. Whether we consolidate first or we just rip through it, whatever it is, whatever the case may be, we're going higher. And the technical target of this pattern, technically, would be 154K. Technically, $154,000. That's that would be the expectation. Measure moves are just that. They are measurements of the move. They are just ideas. They are not requirements. We could fall short. We could exceed it. We could stop right on the money, and oftentimes you do, but anything can happen. Maybe we stop there momentarily. We hit our measure move, and then we continue to rally, something like that. But ultimately, I think this party train's going all the way up to about $180,000 by the end of the year, if not $220,000, somewhere in that area there. I've got nothing else for you guys. I hope you enjoyed the video, and if you did, hit the like button, subscribe. Take care of yourselves. I'll see you on the next one. And again, keep your head screwed on straight. Everything's fine. Everything's fine. We're moving up. We've probably found our low. If Bitcoin comes down $1,000, $2,000 from here, who cares? $3,000, $4,000 from here, who cares? Give it back. Find a higher low. It's okay. Don't let the bulls being loud make it even more upsetting if the price comes down, and don't let the bears being loud convince you that we have lower to go. Okay, it's all emotion. It's all noise. We all know the expectation. We just went over it, right? We literally just went over it. Megaphone pattern. Breakout to 150K and beyond. Okay? It's going to happen. FOMC meeting on the 29th. Bullish every single time going into an FOMC meeting. It's going to happen. Just be patient, okay? Don't let the wackadoos on socials, on your socials, distract you, okay? Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care. Bye-bye.